Hello, hello. Happy Friday and happy halving, guys. How's everyone?
Okay, thanks. Hello.
Hello, Francesco. Hello, Marco. Yeah, pretty good. Happy to be uh, experiencing a new Alving. Third one, I have to say. So
Third
quite
one for
excited.
you, Marco. I guess it's 2 or 3 for you as well.
Oh, I say three. No, that's a
Oh,
mistake. That's the second one.
okay.
That's a mistake. Yeah, 2020 because I missed the previous one in 2016. So
Yeah.
2016 is on the chart, and 2020 was a in real life experience, and this year as well. Yeah, second one.
Yeah, this will be my third year.
Okay. So fourth one altogether. Second one for me too. Although I must say I had no idea what this was all about on the last one. I was complete novice. No idea what the difference was between any of the coins out there. But anyway, we are here. I guess on a celebratory note, I think it's worthwhile to celebrate some of these achievements. Although, quite frankly, this is, well, I guess just like any other anniversary, it's just something that happens in the Bitcoin network. It's in the program. We're just a few hours away, right? It'll be happening this evening, I think.
More or less. Yes, tomorrow morning. Depends
Yeah,
your
it's
time.
hours now, but it's certainly expected to happen today. So why don't we just start with the Bitcoin space, just reflecting on what halving means again. We've covered this on episodes that the mining rewards will have yet again, as has happened before. So this is just what's inscribed on the protocol. Can't change that. So as and when that time, there's a timer actually. We've linked here in the top right corner if anyone wants to take a look at the actual countdown. But that's going to just take place, and miners will just see their rewards cut in half. That'll be interesting. Maybe we should start there actually, because it is halving day, and that is what's going to happen as of today. Every miner that's out there busy deploying computing resources to secure the network and validate transactions will suddenly just see their rewards cut in half. So should we just start there, guys? Well, what are your reflections on that? What it might mean? Hash rates might take a correction. I think we can expect potentially some of that to happen. Some consolidation, maybe. Some of the smaller miners might just not be able to stay profitable, and what that might mean for this whole ecosystem. Any thoughts on that?
Sure. On my side, like I think it's now we are getting more and more aware globally, right, of what halving means, specifically what the consequences are, and we know that there is basically there's a direct correlation between price of production of Bitcoin and price of Bitcoin, which is something that most people don't talk about, as if, especially when we say like, what's the price of Bitcoin? Well, as any good, basically there is a price of creating that asset. So there is a price, there is a value that you can extrapolate. It's not just like how much is a banana. Well, depends how much it costs creating the one banana, right? And then you had all the market on top of that. So currently we have price, like as we always had, price of Bitcoin. And the interesting fact, at least to me, is like maybe it's counterintuitive, but we have this idea that the price of Bitcoin is aside completely volatile and completely made up. It's very high at the moment. But if you look at the chart of price of Bitcoin, like cost of producing, average cost of producing one Bitcoin across all the miners, and the actual price of Bitcoin, you see that the two curve, they're getting closer and closer to each other. So now, especially after the halving, like at the current price, we can say that technically Bitcoin is going to be cheaper next tomorrow or next Monday going to have a much cheaper Bitcoin compared to what it is today, because technically still today minting one Bitcoin is going to be half the price of what's going to be on Sunday or on Monday. And that is not just important, but this is true.
Sorry, can you just explain that, Marco? I'm missing something. Why do you mean? Why is the cost today half of what it's going to be?
Yeah. So go back to the bananas. Let's say one banana is $1 today, and tomorrow is $2. If you're buying today, effectively you have bought it 50% cheaper than tomorrow.
Mm-hmm.
That's what's going to happen with the halving tomorrow. So the price of the Bitcoin will go up around 2x, because if the price of creating one Bitcoin, not the price of Bitcoin. Like I said, let's make a differentiation between the cost of production and the actual market price. Cost of production is globally, I think it was around 30 something, like the average globally, and it's going to ramp up to 60 plus.
Mm-hmm.
Of course,
Marco, you just have to mention, because the reward would be divided by 2. So by the effect, as you're getting less Bitcoin produced and the price remains the same, then you have cheaper Bitcoin, just because the reward, the emission will be divided by 2.
So your machines that are currently today producing, let's say you have enough to produce one Bitcoin per day, right? They cost you something, machine costs something, plus electricity costs. Like you have the fixed cost, machine, electricity. Then you have cost of setup and installation. You have maintenance costs, because you can imagine that a mine rig has certain setup. Like you can, people have this idea of just plugging your laptop or your computer to the miners, to your electric plug. No, it doesn't work like that. When you have a big Bitcoin rig, Bitcoin farm, you actually need transformers, electricity stabilizer. You need to be close to the plug, to the node of distribution of electricity. You need to have a specific deal with the energy provider. There's many things that comes into play, but just simplify everything. Cost of electricity, cost of machines. And today you get, let's say, one Bitcoin. Monday, you get half of a Bitcoin for the same work, same machine, same electricity. So
we're slashing profits in half.
Exactly. So that means that what you're getting has doubled in value for you. So the interesting part, like I said, it's seeing that the cost, it's very similar, like this number of address with a non-zero balance. The cost of Bitcoin compared to the price of Bitcoin is getting closer and closer together.
Mm-hmm.
And then the most amazing thing for me to discover is that 90% of the people still have no idea that Bitcoin costs something to produce. And what happens if we don't? Like, what happens if we don't produce Bitcoin? What happens if you don't produce Bitcoin? Well, technically nothing. There's no problem in not producing Bitcoin. The problem, and this is like purely like market thing, is like there's no more Bitcoin, there is more scarcity. Fine. The problem of not having Bitcoin miners, which is different to just producing Bitcoin. So not having those people plugging their machines into the network, is that we're going to have a major issue with no transaction being validated. So basically, if you have your Bitcoin in your wallet, that's where they're going to stay. You don't send it out, because nobody is going to be there.
I think it's important to emphasize that we often associate mining with emission process, which, in terms of the emission curve, where, as you say, theoretically, even if we were to stop the mining of new Bitcoin, we're already at 19 million plus, so not far from the end point. but probably actually what's more important in future is how we secure the network, how we maintain and validate block after block.
Yeah, and you just said it, Francesco, there's security as well. Like you need miners and certain split in mining shares, because if it's too concentrated, then you have a risk. Even though there is a cost for it, it's very expensive today to compromise the Bitcoin network, but still you don't want to have someone holding more than 50% of the network by himself.
But Marco, just getting back to your point in terms of how the lines are touching the cost and the value, or the cost and the price. Am I right to understand? You're saying that because you're saying that on the assumption that the price does continue growing. If price was to stay where it is indefinitely, you're doubling. So with a fixed cost, let's assume that it's for all the reasons you stated. Your infrastructure, your energy contracts are, broadly speaking, rather fixed and hard to work with, at least in the short term. If the price doesn't change, your benefit from a mining perspective halves. So you're mining on the expectation of future growth.
It's not your benefit. It's you're not any more profitable.
Right.
You just stop it because you are running at below cost.
So I'm just sort of reiterating this from a mining incentive perspective. You continue mining on the expectation that even at the same cost, and there's plenty of work being done around sourcing cheaper energy, finding more efficient mining infrastructure, and that has its own sort of curve that can only, I guess, optimize up to a certain point. But the expectation is that even if your fractional sort of Bitcoin reward might go down proportionately, its value is expected to continue rising with the network effects. That's the sort of mining business model.
Yeah, I mean, let aside the securing the network and effectively validating transaction. Look at like gold. If gold go below the price of production, and it has a price of production, of price of extraction, if you want, would be any gold mine in the world? No.
Yeah.
Nobody would care about that. That's it. It's really, really simple. That's why I mean, a bit always surprised when I hear the big people in finance talking about, oh, it's a scam, it's this, it's that, there's no value. It's like, how you do not inform on the basics.
As you touch on gold, actually, I should have included it here in the charts. Bitcoin, as of this halving, will become the scarcest commodity on the planet. It will become scarcer than gold. So meaning that the ratio of new issuance. So as we halve the mining reward, we will be issuing 450 Bitcoin rather than 900 per day over its global supply. So if we put numerate over the 450 over 21 million total supply, we end up with an issuance ratio, a level of scarcity which is lower than gold itself. And as we know, of all the crypto world, Bitcoin is now considered a commodity. The jury's still out on many of the rest of the instruments out there. But as is, I think that's quite interesting, and we'll talk about gold later on in this talk as well. Maxime, you want to say something as well?
Yeah. I was just checking the cost right now. I have a chart where it's live, and still, as Marco said, like electricity cost is around like 30, 40 to give a range, but the production cost with all the machines and stuff is between 50 and 60 right now. Mm-hmm. So if you double that price, you say the production cost is still going to 100, 120K in the near future. So if you want to adapt as a miner, there's a big gap. If you want to still be profitable in the future, you need the price to go up somehow. And I think there is like big strategy for miners right now to get some market shares, because as you said earlier, like some smaller miners might run out of business and the bigger ones will just take market shares.
Do you think some of the price action is also driven by mining miners selling their Bitcoin as their
I'm not an expert here, but you have charts where you can see when miners are selling or not, and they tend to sell a lot before halving. So somehow we can say they were contributing to keeping the price kind of low till the halving. I don't know. I'm not the expert here because you have Grayscale as well, who was selling a lot of Bitcoin too, less inflow in ETF. So it's not like, I think, a very easy thing to analyze, but that's part of it, I guess.
Let's maybe keep the price action to a little later. I'd love to know your views on that, maybe on some of the geopolitical aspects that I'm sure have influenced over this just over the last week. But maybe just to cover off on some of the rest of the data we have here on the screen. I feel like we've covered some of this before, so maybe just quite quickly, I mean, that the price history, bottom left chart, that's just where every Bitcoin halving was, where the Bitcoin price was. I think it's quite telling. It's a nice, refreshing reminder. I know this is a log scale price chart, but it kind of puts a perspective, a quadriennial perspective on just how the price history is evolving with adoption. Top right, you see the number of non-zero balances. I think I always find that is interesting, and actually post 2018, where we've seen quite a sort of a correction. Post that, even in the last winter, right? Even in the last bear market, I think it's quite reassuring, just to endorse how much adoption that there has been, regardless of where the price has gone. The adoption has kept creeping up, and of course, we don't offer price advice or financial advice in any way. Again, it's just historical data. Bottom right chart shows how the cycles have played out from the relevant, from the previous bottoms. So we're now in the black line, still at its infancy from the previous low. What looks pretty obvious is that every cycle's multiples sort of compensate, or as tends to happen for any innovation, the big alpha, the big X's, the exponential growth tends to sort of settle down eventually, but there still seems to be certainly room for growth. And any other thoughts or views on halving effects, guys, that you think we should cover?
I mean, I like the network effect. We see it's growing, and somebody told me recently, yes, but you don't know who are those wallets. Maybe people have multiple wallets. I think that's true, but I think the more addresses you have, the less diluted it is. I mean, it's hard to move the number just with people having multiple wallets, right? At the beginning, maybe it had an impact, but I think more and more it's real addresses and more people joining at a large scale. And also it's just Bitcoin. So here right. You also know I have to include potential wallets such as Ethereum, Solana, that you have people that are not holding Bitcoin but other crypto. So it's even more.
Maybe reflecting on that and thinking about the large amount of volumes we've had since the ETFs just this year, for example.
Yeah.
That should not have influenced this metric a great deal, right? I mean, I wouldn't expect that to be segregated. You wouldn't expect to see the number of holders, individual investors that have bought ETFs will not add up to this list. These are real Bitcoin on-chain wallet holders. So, the various ETFs will have their wallets at Coinbase and stored there, right? So the numbers going up irrespective of the ETF.
Yeah, true.
Marco?
I agree with most of what has been said. I think, like, for me, there is a couple of things I want to say about the ETF and the price action and compared to the miners, but I think we'll get this.
Well, let's get into some of the market data then, and I'll let you take us away. We've got a couple of slides here, but there's just some basic information on market cap, volumes, market sentiments. Take us away.
I think right now it's a little bit outdated because market in crypto moves very fast. There was a recovery this morning, let's start with news fundamentals. Altcoin just launched Monday. ETF on Bitcoin and Ethereum. And although are extremely, like, they're very low in participation and in volumes, it just speaks of the adoption from TradFi. The market is currently encountering two forces, or three. One was that it was already quite high, so rarely relief was in the card. To be honest, every time we go with the fear and greed index around 80, 85, it's not that it's mandatory that happened, but it's kind of healthy if you have a sellout, let's say somebody taking profits, and then you reshuffle the cards a bit. And then we had the geopolitical instability. Geopolitical instability always equal to risk off. Risk off is it's a template word, right, that we use in finance whenever there is something around the world that may undermine global growth, and there is risk of something breaking somewhere. So what happens is you just automatically reduce your allocation in risky asset in your portfolio in favor of less risky asset in your portfolio. So it's very, very simple. You just correlate two things: gold, bonds, and US dollar index against emerging markets, cryptos. Well, just those two, it's already like a lot. But you can have, for example, small cap stocks and so on. And you see how they are completely inversely correlated. They diverge, their chart diverge. When the economy is going up, there is no major financial problems. Globally wide, we don't have many wars. Invest in risky asset. When you have COVID, when you have World War III or whatever, just flow into the safe haven, right? So that's macro things that always happen. Imagine that you have trillions of dollars being moved this way by algorithm, by standard portfolio optimization. And so you understand why now we have the situation that we have, especially with the Middle East tension rising up.
Maybe just to put things into perspective for the viewers, the top right chart here shows a monthly chart of the entire crypto markets, and the piece you just alluded to, Marco, is the choppy downward shift we've seen in the last week or so. I think it's always interesting when we put it into perspective. We're basically witnessing the last month of accumulation just being wiped out. That's actually, if we would have zoomed out on a 3-month or annual chart, it would have looked, the usual up to the right type chart. But points well made. Sounds like the market sentiment is becoming a little defensive. It's interesting that the BTC dominance keeps rising in the current climate. At least it's been going up versus ETH and versus most of the market. It's now just dipped over 54%.
I mean, to explain this, maybe like make this clear. What I just said as a macro pattern, then you can replicate that macro pattern in every single industry. And what happened is that Bitcoin is the safe haven for crypto people. So you are in memes, everything is going up, you're making a lot of money, blah, blah, blah. But then you start to see like there is a lot of volatility, macro risk off, it's kicking in. What you do, transition into Bitcoin.
Yeah, I think we can see that here. I know that the numbers might look a little dark on the screen. But yeah, if we just look at the last 30 days and the market impact on BTC versus the next one down the list, ETH, or some of the rest, just look at Avalanche, for instance. It's down 40% on the month. It's many more in double digits, and we're just looking at the top 20. I wasn't planning to really cover any of these in particular in any detail, but just as a reminder that markets are volatile. They do go up and they come down swiftly, including in bull markets. We've said this over and over again. Actually, we're planning to send out another educational video on tips for bull markets, which will include sort of how to navigate volatility and dips and yeah.
I actually very fond of one indicator in particular, which is Bitcoin versus altcoin season, and that it's slightly different than Bitcoin dominance, but it has more or less the same fundamentals.
What do you mean by that, or how do you? Is that a metric you're alluding to?
It's a specific indicator, okay, and what it tracks is zone, okay, in which when the dominance of Bitcoin goes towards one of this zone or the other, it tells you if we are going towards the altcoin season, which is where altcoin outperform Bitcoin, or Bitcoin season, which is where Bitcoin overwhelmingly outperform altcoins, right? So it doesn't tell you which token, how much, but it tells you more about the cycles inside crypto. And it's important for me because I look at that, but also because there is a non-linear correlation between the two seasons. Bitcoin perform in a certain way. Altcoin are more volatile. Equal means that means that there is a multiplier effect on the alpha you can generate on altcoins. When altcoin outperform Bitcoin, they outperform out of that much. When they underperform of the same value. So this 40% that you show in, for example, in Avalanche, is completely natural in a way an altcoin behave, which is a more volatile compared to Bitcoin.
Interesting. So you, if I understand what you're saying, Marco, you, for the reasons you stated earlier as well, in a defensive market, in a risk-off market, Bitcoin's is the anchor asset, if you like, and therefore its ratios higher. That might continue if we continue seeing a bit of a sell-off, and then your indicator, whatever that sort of level or limit is, might start shifting the other way as assets shift and move back out of Bitcoin into alts. It might be good to have an episode actually on the seasons. There's been quite a lot of this in the news media podcasts recently, but we might want to cover some of this ourselves in terms of how the timing of the market tends to be Bitcoin driven at the beginning and then shifting and rotating into alternative coins throughout the season, so to speak, and maybe how to read that. Anything else, guys, on the market? Otherwise, maybe Marco, you can share some of the geopolitical rationale factors at play and how looks like we're back to a gold rush with gold prices back, well, not back to historical highs. We're at historical highs. And it's interesting, I think, that central banks more than ever are starting to reaccumulate or accumulate faster than they've ever been, and that's an indicator of risk at play in a far wider sense that our beloved digital assets, Bitcoin and crypto world, which is tiny in comparison.
Yeah. So there are, let's say, here. Now we easily were driven to think that, oh, this is because geopolitical tension, wars, and stuff like this. True. But it's an accelerator factor. It's not the main driver. The main driver behind the accumulation of gold is because there is an increasingly higher risk from fiat currency. The more a currency is deemed to be risky, the more it makes sense to diversify against it. And when you are in the traditional finance world, so in TradFi, you don't have a lot of option for pure diversification in that sense. And why I meant that, because yes, you can diversify with stocks, but stocks are underpinned by the country economy of that country economy, and that country economy is sustained by the fiat. So you end up indirectly being impacted by it. One thing that is not impacted by its commodities, right? Like oil, grain, silver, gold, platinum. Aside gold, who has been always seen as the protection of wealth, is to some extent even silver, but like all the other have been seen as commodity in the way that is used in industry. For example, diamond is similar to gold. Art is similar to gold. It's a way to protect yourself against anything that can happen on the fiat currency. And currently, the interesting part is that in the few years, specifically in the past 4 to 5 years, the risk level of US dollar has risen immensely. So there is a embedded risk in holding US dollar. And that risk have risen because we are aside printing, but the treasury, if you look at the chart of US debt, is going like exponential.
Yeah.
And that means once you are above the trillions, right? What's that? How much is that value? How can it ever be repaid? It cannot. It's impossible to repay. It doesn't matter your GDP. Okay. It fuels the sustained growth dogma, but at the same time, people looking at it, look at the GDP, look at what happened if, and that what happened if become there is no solution. It's doomsday scenario, and so you need to let's say position yourself as a let's say reasonable portfolio manager, asset manager, whatever. In a central bank as much as in a fund. You need to diversify your asset, and definitely the one that you want to have in TradFi is gold, because it allows you to have a complete diversification, and even if World War III has to happen, gold will still retain a good value for humanity. And that's the thesis, to a certain extent, of Bitcoin is trying to push, right? What's the difference between gold and Bitcoin? Well, there are many, to be honest, mostly technical, but from a high-level point of view of capital preservation, Bitcoin actually performed better than gold in that sense, because it's predictable. You cannot say tomorrow, well, guys, in 5 years, this is going to be what the economy is going to look like. This is the amount of dollar that we have in circulation, of gold, of this, of that. Well, you can say, in 5 years, we're going to produce X amount of Bitcoin. For sure.
Yeah.
You can predict it now. It's not a prediction. It's an equation that you have to solve. And at the end, you get a number.
Yeah. I like that narrative. And also, I told a friend recently, because he was asking me about halving and so on. And with the current macro situation, I told him, you know what, no matter what happened at the macro level, we are seeing a correction. So he was telling me, why Bitcoin is going down and so on. I was telling him, halving is going to happen no matter what. You can have World War III, or no matter what's going on at the macro level, we can see it. There's tension at the moment, but the algorithm is still going on. And it's quite strong, I think, as seeing Bitcoin as a reserve of value instead of just a speculative asset. I think, but as Marcus said, it's the most predictable asset that you can hold right now.
Certainly is, though I think it's still telling. Explaining it the way you just have, Marco, and yourself, Maxime, is simple if we're in the sort of crypto digital asset cocoon. If you're explaining Bitcoin is the new gold to your neighbor, that narrative doesn't quite pass through as simply. And the moment you start speaking of miners, you'll see them run away in the distance, not want to know any more about it. So I think, again, if you've been in this ecosystem long enough, it makes complete sense, and I think that narrative is only but increasing, as we saw back to the adopters. No, the number of Bitcoin believers is certainly increasing, and the wider ecosystem is following suit. And I think we're still.
I think you touched a really important point. It's like your neighbor will not believe it. It's like that's the power of price. The more and the longer we stay above a certain price level, and we keep validating the access to traditional finance and so on, the more these people will believe it. And I can name you, for example, one specific case for that is, for example, ChatGPT. How many people knows how neural network works and generative AI works? And how many people actually use ChatGPT?
Yeah.
Now, give me the 2%, and then you see that.
Sure, you can say the same of the internet. How many people know how this video sort of podcast is operating on technology grounds? Very few.
As long as they using it works, right?
Yep.
Now, in case of Bitcoin, but in the same case of gold, right? People do not use gold, and people do not use Bitcoin. What they see is that the price of gold always going up, always staying stable. That's what Bitcoin has to. The challenge for Bitcoin is to being pushed via price as the medium for generating acceptance.
Yeah. Just have to tread carefully, as often happens, as happened probably to most people at any cycle. You learn about Bitcoin through its price. That's sort of the network effect. Once you start reading about it on the headlines, news, whatever, you go in, you might get burnt at a correction, but that gets you to sort of start studying, learning what it is, and understanding what you're putting your assets towards.
Yeah, but you have still some interesting stats. I think you can't be underwater more than 2 to 3 years with Bitcoin due to halving. So far, if you take a long-term chart, so if you're an investor long-term, it's like...
There's a study that's been made recently, actually, I just saw it come out, which suggests that at whatever point, even if you were to invest your money at any peak of a cycle, meaning you would have had to see a long pullback. If anyone's held their assets for more than a cycle, basically a 4-year cycle, there are no loss. There's nobody in loss. No.
Yeah, and it's even huge benefit because you would multiply your initial investment by 2, 3, 4x depending on the performance of the Bitcoin. So on the long-term perspective, it's always trading against investing, right? If you're like investing, no leverage, no nothing, like you're just holding your assets on with let's say 5-10 years vision, I guess you're minimizing the risk here.
Not financial advice,
not
but
financial advice, of course.
That narrative to anyone that ever asked me, if you're interested, if you're intrigued, and you're prepared to put an amount of money that you might lose entirely, go in with a conviction to keep it for at least 4 years. If you're prepared to do that, then I think you're in reasonably healthy grounds. Who knows? History doesn't repeat itself, but it does often rhyme. I thought I'd put this one up as well, just to remind ourselves that we can talk about halvings and price and wallet accumulation, but Bitcoin's still where it is. It's $1 trillion of assets. I've seen so many different variations of this theme. How big is the global world market if you put everything in, from, like you were alluding to, gold and art before, but equities, bonds, real estate, and so forth? Who knows? This particular read takes 900 trillion as the denominator, so that would make, well, there you go. You just see it on the chart, just how small Bitcoin's influence in the macro perspective is. But it's kind of exciting as well. If in 15 years it's made its way on this chart, who knows where it's going to be in 10, 20, 50, or 100 years.
Yeah, I think for us, like what is this is a nice high-level overview. But if we focus short term, in order to, for example, to tackle, I don't know, real estate or just equities, you need to have a much more mature network adoption, TradFi, DeFi, interconnection, and so on. But at the current stage of development of the crypto and Bitcoin network, I think that the first target is definitely gold, because we are on with the ETFs. We are already at the same stage of use case, or at least use case and utility. 99.9% of people buy gold is not because it's used in some specific application in the industry. It's just because they want to do capital protection, and nobody wants to have gold bars at home. Okay, so the same thesis that you have for gold, you can apply to Bitcoin, with the difference is that we do not know how much gold exists. We are completely at the decision, impacted by the decision that the miners, like physical miners of gold, do. And then there is always geopolitical risk that the mines that they are opening in country X could be closed because of whatever. Bitcoin has much less geopolitical risks because it's distributed, the network, and also because we know, and you have a certainty on the amounts, as we were saying before. So you know exactly how much, when, and how we're gonna, at what time, in any point in time between here and year 200, when we finish 2100, when we're gonna finish mining the last Bitcoin, we know exactly the day how many Bitcoin will be mined and we produce that day.
Let's not forget that in real geopolitical sort of periods of tension, anything can happen. In 1933, gold was confiscated from any of its holders. So you wouldn't want that to happen again, and even more so with a digital asset. I suppose Bitcoin is censor resistant. You can.
But that was the physical gold, right? I'm talking that 12 trillion that you see there is not physical. It's not physical. Is ETF, is CFDs. It's financial product. Like, people have this idea that you have physical gold. Don't just abstract from it. Remove from your mind the idea of the physicality being important. It's built over financial derivatives. That's what's important.
I think we could probably bring the slides down at this point. I think we've covered what we had on screen. Anything else, guys, on your minds you want to talk about and rap about? What's on your mind else than Bitcoin, gold, and geopolitics?
I guess there are still, Marco mentioned altcoin vs Bitcoin. That's true. As you said, like, the Bitcoin dominance is quite high at the moment, and there's a lot of expectation of what we call kind of crypto summer, where all the supply and the money in Bitcoin is being transferred to altcoins. So the altcoin dominance goes up, so Bitcoin dominance goes down, and you have this balance where they call it usually crypto summer. Let's see if it happens, because it's also a huge catalyst, but there's also some catalyst for Bitcoin itself. So that might explain the dominance. We have a few projects that are building on Bitcoin to make it to create more utility. There's a lot of controversy about it, by the way, because it's adding more additional work on the Bitcoin blockchain. That is proof of work, of course. So it's slow, it's heavy, it's costly as well. But let's see if it plays out. I mentioned it already. We have the Runes protocol that is launching with the Halving, that will let people make it more easy to create fungible tokens just like ERC20 on Ethereum, you will have a new standard to create new tokens on the Bitcoin layer. And there's a project called Stark, and you also have Core that are building DeFi on Bitcoin. Because as of for now, if you want to do DeFi with Bitcoin, you need to bridge your Bitcoin to another blockchain. Let's see if we can do DeFi on Bitcoin itself. There's narrative for Bitcoin, so that's quite exciting. And we can cover this in a full episode. We are at 45 minutes right now.
We have covered layer 2s on Ethereum before, but not on Bitcoin. Maybe that deserves. I mean, that's a whole change of philosophy as well, isn't it? In terms of the whole Bitcoiner ecosystem will sounds like is testing on new grounds. We'll see how much will yield and come out.
Yeah, and for me is that I want to go back to the point, to the open question that we had regarding miners selling, keeping the price stable against ETFs. So I'm trying to make it short and simple. ETFs have been experiencing a rate of rebalancing between each other, but definitely have seen a lot of adoption coming from ETFs. So a lot of the price action that we have seen has been driven by that. And of course, you can have set miners that sells. The thing is, like, the quantity, the amount of money, and this is the interesting part for me, the amount of Bitcoin that could be sold by miners aside their own inventory, okay, set aside that, is deeply dependent on which halving cycle we are. Because the miners mine more or less, okay, they have a increase in computational power, but it's very slow. Otherwise, they produce more or less the same amount. And that's the fixed amount they could, even if they sell everything, they could bring into the market. On the other side, you have new money, which is adoption through TradFi via ETFs that comes in. And as we've seen here, like in this slide, right, see how big it is, the Bitcoin market compared to everything else. We are way below the 1% here. Okay, we are at 0.12% of the global asset value. So it's important to discover and to project eventually what could happen now with the miners, what strategy the miners will apply, because now Monday they will have half of what they were producing in rewards. There is certain variability, certain volatility of this, depending on hash rate, depending on price of many things, but computational power. But let's simplify everything into say it's constant. Well, the amount that they can sell is effectively half, for obvious reason. Set aside inventory. What's it going to be the ETF? That's the question. That's the big question, I guess, because push from the ETF in terms of inflows will generate an even bigger effect in the market, in the Bitcoin market. And conversely, a push on outflows from ETF will create a bigger drop in the market, simply because there will be more and more the major actor in the space, and the miner will have less and less space to let's say to drive the market price, the Bitcoin price, because they have less availability.
Yeah, I have been speaking to a few mining companies actually recently, and it's just interesting how and where Bitcoin miners are going. I think we've all heard that there's a lot of interest in remote parts of the world where natural resources are abundant, but energy, sort of industrial infrastructure is very limited. Typically, until this point in time, you wouldn't have invested in a electricity plant or a hydroelectric plant or in building industrial level energy capabilities in a remote part of the world, because there wouldn't have been a market for it. We tend to lose a lot of our energy in transit. But by tapping into those natural resources, whether you're by a volcano, geothermal power, by rivers, and anywhere we can access natural energy. I'm thinking of solar panels in deserts, territories. Bitcoin miners don't have to be near us, near humans, near civilization, near cities where most of the energy is being consumed right now. And I think that's
I think has been said by Jordan Peterson, which is also interesting because he is not absolutely somebody who is in crypto or something like that. But that when he was listening, and he said that in his mind, then Bitcoin is the most efficient way to transport energy.
That's right. I'm starting to pick up on this. Well, actually, we have a couple interviews on our channel lined up on this theme. One will be on the sort of the sustainable side of blockchains, and there will be some maybe provocative discussion on the Bitcoin side of proof of work and what does that mean. But on the mining side, it's very fascinating. I wasn't aware before I started digging into this space that 65% of the energy humans produce is wasted. We generate energy and we can't capture it, we can't transport it, we lose it, we keep our, think of all the technology that's running just around you in your homes, in your ecosystems, that's just using electricity for nothing. Not to mention flare gases while we pump out oil off the ground and so forth. So there's plenty of opportunity to just plug in mining facilities where we already have energy, and it's just there, waiting to be used.
Yeah.
All right, guys. So I was actually looking at the counter. I think we could probably wrap up there. It looks like we're 15 hours, 37 minutes, 57 seconds, and various milliseconds away from the halving. That means in European time, the halving will actually not happen on Friday the 19th, but sometime in the early hours of Saturday the 20th. It will be the US only that will be celebrating on the 19th, I suppose. But it is what it is. We'll wake up tomorrow and everything will be the same. It'll just be less new Bitcoin mined and made available to the world. Only 450 a day. Cool. Great, guys. It's been a good chat. It was a while we hadn't had one of these, so I look forward to the next one already.
Yeah, thanks for your time.
Thank you. Thank you very much.
See you soon.
Hope you enjoyed. Cheers.
Ciao, ciao. I hope you enjoyed our video. If you found the video informative, please don't forget to follow our channel and click the alarm button to be informed of new videos coming through. There is plenty to learn and get your head around on your journey to mastering crypto. Thanks for watching and see you on our next video.